A very good evening, dear students. So, today we are here again, and today we will be starting with a new chapter, which is chapter 9 Accounts of Companies. So, this chapter, if I basically see, deals with section 128 to section 138 of the Companies Act 2013. As the name suggests, it says accounts of companies. That means कंपनी के अकाउंट्स जो प्रिपेयर हो रहे हैं, the accounts, books, papers, documents of the companies that needs to be maintained. So we need to understand that why this chapter is so important for us. Why are we discussing that this chapter is important to us? Every chapter has its own importance. If we start looking for the whys of a section, it will be much easier for all of us to understand and then to retain the section and understand that why we have to understand it from a practical point of view. This chapter forms the backbone of financial reporting in companies. What happens is that this chapter helps you, the students, to understand that how companies are required to maintain, prepare, present, and file the financial statements. A strong grasp of these provisions will help you in better auditing, in better tax planning, and better statutory compliance. So, if I'm saying that we have to understand why, let me give you an example. So, supposedly you are working with a CA as an article, and your CA is required to, it has been given assignment for tax audit report of a company. Now, what happens is you go to the company and see all those things, and suddenly you see that the companies that the company for which you have to prepare that tax audit report, that company is not maintaining proper books of accounts. So now directly you will be referring to section 128. So you need to understand that what does section 128 says. This section says that you need to maintain proper books of accounts at the registered office for a period of 8 years and in electronic form. This will help you to see that if they have not prepared supposedly they have not prepared some relevant ledger book. So that means they have not prepared proper books of account. You can directly link it and then raise a red flag that, okay, how can we prepare a tax audit report for this company? So this company is not in compliance with section 128, or supposedly they have not prepared the purchase ledger for today we are in 24, 25, 26. So say they have not prepared it for 24, 25. So it will be a problem. So, but how will you know it? Practically, and then section 128 will help you that you have to maintain it. Then apart from that, supposedly you have to file a ROC you are filing ROC returns of a company, of a firm, of a company. The client has given that work to your firm. So now what will be like? You will be referring to section 137, which requires that the financial statements of a company are to be filed with the registrar within 30 days of the AGM. So it will help you in compliance. Here, you know the provision, so you will feel like, okay, I know it, so what is that? But whenever you are reading any section and you think about it, that how will it, especially in this chapter and the next chapter, which is your audit and auditors. So in both these chapters, if you start looking for whys and how you can incorporate it, you will start directly feeling like you are a chartered accountant, and then you will feel much better about reading and understanding the provisions. So with this, I will give the baton to Shrikant sir, and he will give you a detailed explanation of all the sections. I welcome you, sir, and my dear students, good evening.
Thank you, madam, and a wonderful introduction. Thank you. And good evening, students. With this, I will share my screen so that we can start our session. Yes, as madam rightly introduced the topic, today we'll be talking about the topic accounts of companies. So this is contained in Chapter 9 of the Companies Act. Okay. Now, for other non-corporate entities, there are no specific provisions for maintenance of accounts, etc., unless they come under tax audit. In which case, under the Income Tax Act, yes, there are certain rules and all for maintenance of books of account, etc. 44 AB, then for all the tax audit as rightly said. But for a corporate entity, it is the base law, the law that creates the company itself provides for an elaborate framework for maintaining books of account. So I use the word elaborate. Elaborate means complicated. It's very huge. I'm not joking, because what you're going to see here is only the section and a little portion of the rules. The Schedule 3 is there, which is by itself a complete text which needs to be understood, which you will do in financial reporting at the higher level or even in intermediate. You should be thorough with the rules of every note, every item in the balance sheet has to be elaborated, has to be detailed. And then you have the accounting standards, whether local, the GAAP or Ind AS, whatever. So the accounting standards or the Ind AS, whatever. Now, so this framework, the foundation is laid in Chapter 9. Chapter 9 is the root. From that, this rickshaw is coming fully with all the branches like Schedule 3, Ind AS, accounting standard, so on and so forth. So that's why this becomes very important. And as rightly said, the company, whenever you read this chapter, remember to think like a chartered accountant. I think Madam Shraddhaji made a very, very beautiful point here. Think like a chartered accountant. Think like you are already there. You are a member who is either maintaining the books of account, who is responsible for maintaining the books of account of a company, or you are an audit chartered accountant in practice who has to certify or a testing function for a company. That will become more relevant when you come to auditing, but even in accounts, you have to be a little careful. So let me take you through these provisions to the best of my knowledge and abilities and see. So before we get in, let's look at a general overview of what we will be studying over these 3 sessions. So Ajto will be only seeing the fundamentals, like the base 2-3 sections, right? So the types of accounts to be maintained, definition of books of account, relevant books and papers. What is financial statement? Though the singular is used here, it is a bunch of documents. I don't know why they made it a singular. In my humble view, it should be statements. But I have a theory why they call it financial statement. When I come there, I will tell you. But so, otherwise, I would say financial statements. The plural would be preferred, but they call it financial statement. Assuming it's a grammatical error, it is the duty of the user of the law, the practitioner, the judge, not to reduce the law to a futility. You will study it when you come to final in your self-paced module. When you read on your own, you will read interpretation of statutes where they will say the judges and the lawyers and the practitioners like us, we should not reduce the law to a futility because there is a ambiguity or shall we say confusion. We should not make a law into a nullity. We should try to read meaning into the enactment by interpreting it. So in that sense, I will try to read some meaning into this singular financial statement. For the first time ever in the history of Indian, shall we say, corporate law, they have introduced the concept of reopening and recasting of accounts. I have already mentioned it to you when we studied dividend that many of the provisions of accounts and audit in the 2013 law are based on the bitter experience of Satyam scam. So you will find Satyam scam is reflected everywhere. In many sections, you'll find, see, it's like this. Once a burglary happens now, we start putting locks in every door. We start doing this. We start analyzing. We start getting security cameras, everything. Not too late, because we can still protect other future frauds. Though strictly speaking, Satyam was a well-laid fraud. It was a collusive fraud, well-laid fraud, not so easy to discover. And I'm not saying it could not have been discovered at all. A diligent audit could have discovered it, or at least see we will know, yeah, when we come to auditing, maybe inshallah, I will tell you more about that. So no, if a person says, I'm not even aware of the fraud, then his quality as a practitioner of this profession should be deeply questioned. It is deeply questionable. Whatever it is. So they, in that background, they have provided opportunities for reopening and recasting when fraudulent accounts are maintained. I seriously doubt how many times this section would have been invoked post Satyam. Nevertheless, it is available for any company or any authority to do that. When we come there, we will see that. Hopefully today. Voluntary revision of accounts. Voluntarily. You can revise. The company board of directors can do it. And then, of course, the NFRA and the new board entity and all that. And then audit reports and board reports, mainly the board report in the corporate. And as part of the board, I think the corporate social responsibility provision is here. CSR, which is basically should be coming in powers of board, comes here, the duty of providing. So possibly because the CSR contribution calculation is linked to profits. Therefore, it's coming here. Okay. And etc. etc. Lastly, we have compulsory internal audit also. And right. So with this, we would be covering the entire topic of books of account. As usual, you can raise your queries in the chat box and also. So also there is something called the query pad. In case you want to raise, hello, Priyansh, I know that you cannot, if you have to go out of it to do all that, I'm aware of it. If there are other people who have access to query pad, they can put their queries in the query pad. So you have two options, like whichever is convenient, you go ahead and do it. I understand that there are some difficulties in accessing the query pad. Anyway, so anybody having any doubts regarding how to join, how to view, or I'm not able to, connectivity is not good, etc., etc. I think you will have to go to the help desk of the ICAI. I'm sure it will be there in the mail you have or whatever it is. You go to them and they will guide you. I will not be able to help you with regard to that aspect of, I am the faculty teaching. So any query on the topic, I will answer. Other than that, I can. We'll come to that. Nidhi, this is only overview. When I come to thing, we'll talk about it. Relevant. Relevant means which is applicable, which has some link. That's called relevant. We will tell you. That is the idea. That's the whole point of this lecture. They must have considered as one of all accounts as financial statement. Okay, whatever you're saying, I'm able to understand it to an extent, but okay, let me see. Maybe once I give my view, maybe you almost the same. So now, books of account to be kept by company. Okay, again, a small grammatical note. Is it book of account or books of account or book of accounts? Now, simple. Father-in-law, singular. Fathers-in-law, plural. Correct. So whenever there is a preposition, see this word of, it's called a preposition. Whenever two nouns are connected by a preposition, always remember the noun that is coming in the beginning is the subject. And anything to do with plural singular should be only for that. Whereas the noun that comes later is descriptive. So that doesn't change. It doesn't change anything. Okay, number, gender, nothing. So, fathers-in-law, mothers-in-law, brothers-in-law, books of account. So it's not one book of account. Usually it's books of account, because as you are experts in accountancy, I shouldn't even attempt to explain this to you. But nevertheless, okay, so you got the books of prime entry, the journals, the cash book, bank book, etc., etc. Then you have the ledger. Okay, so there are many books. So that's why we call it books of account. And other relevant books and papers. Relevant means what? Connected to the financial statement. Anything that is connected to the financial statements is called relevant books and papers. Relevant here is, suppose I were to give you a lecture on the philosophy of Advaita and compare it with Vishishta Advaita, will it be relevant? No. Because today what is relevant? Anything that is connected with accounts, books, section 128 and Companies Act is relevant. Anything that has no connection with that is irrelevant, not relevant. So what we mean by relevant books and papers is any books and papers that are connected, okay, with the financial statement. So first of all, 128 mandatory mandates every company, no exception, no OPC exempted, no small company, no all, every company shall prepare books of account. Okay. What are the books, nature of the books of account? We'll see later next. And other relevant books and papers. So one more thing that you can understand from this books and paper is relevant is, friends, now you think like an auditor. You are going to the book, you are going to the company. They provide you with the books of account, maybe in Tally software or some other ERP or whatever. So you take April month ka transaction and you keep looking at it and you find that printing and stationery, 2,50,000. So bank printing and stationery account in the bank book, buy printing and stationery, right? Now immediately you are in the bank account, buy printing and stationery. Little bit of accounts I also know, yeah. Something I learned in those days, 1984, 80, 85, 84, 83, 84. Today, for some other purpose, I'm doing an MA in Vaishnavam. So I was just taking out all. They were asking for +2 certificate. I don't have it. I finished my +2 in 1984 and 10th in 1981. I don't. My secretary was searching for it. And suddenly we got some papers. We put it and sent. BCom I finished in 1986. CA, of course, 1987. When I was 21 years old, I finished my CA in 1987. Luckily, that is there. COP is also there. Okay, all that is preserved and kept carefully. Now, the point I'm trying to make this, when you go there, you see this entry, buy printing and stationery, 2,50,000. Now, this is books of account, agreed. But now you are asking the next question, what is this printing and stationery expense? So that person who is maintaining accounts is saying, sir, printing and stationery expense, sir. I am aware of that, but what is it? Kya hai? What is it? What did you do? What did you print for 2,50,000? No, sir, this visiting card, letterhead, MD ka letterhead or sub. No. Okay. Show me the bill. Now that is the relevant books and papers. Are you able to understand? Show me the bill. Original. She has to show. Now you see that. No. Is it authorized? Printing stationery bill hai. Is it? Who is the authorizing person? Voucher. That is the relevant books and paper. Then, so on and so forth. If you're going for purchases, suppose particular purchase is about 2 crore, there is a need for an approval by the purchase committee. Then the purchase committee ka minutes hai na? That is the relevant books and papers. Like that, once you get into large company audits, now this becomes very important. So you are approving capex purchases. So capex purchase, there's a separate committee consisting of CFO, chief mechanical engineer, and company secretary, blah, blah, whatever. Now, they would have met many times for approval of capex. So I want to see the minutes. What did they do? How did they arrive at the conclusion? Did they get 3 quotations? Then that becomes relevant. Are you able to see? Once you get into this books and papers thing, it's huge. In fact, the entire subject of auditing will come in. Whatever you're studying in auditing will come in straight away. So if you want to verify capex expenses, whether the capital expenditure is true and genuine, so many things I have to see. One entry in the ledger is not enough. One entry in the bank book is not enough. Okay. So I'm just giving you these inputs to make you understand the nature of the relevant. So anything could be relevant. The company cannot say, you cannot see this. You cannot see that. If you are the auditor, you are entitled to see everything except one condition they can place. What is, you will see that when you come to auditing here also. They can say, look here, Mr. Auditor, you want to see my board minutes? No problem. I will show it to you. You are entitled. Only you, only a member of the institute who is bound by the code of ethics, who is bound by code of ethics of confidentiality, only he can see. Or if you have a qualified assistant or a partner who is also a member of the institute, then they can come. But other than that, we will not permit anybody else to see the board minutes. Reasonable. Because the minutes of the board of directors is a relevant book. Are you able to understand? It's relevant. Because you are saying that you borrowed or you lent so much to this. Will you pass the relevant resolution for your information under section 186? We have passed unanimous resolution. Pass kar diya, pass kar diya. Yeah, you passed, but show me, na, you show me. Now what happens? They will say, we will show you entity, you the partner or your other partners or qualified assistant who is qualified member of the institute. We will show. So this one single relevant books and papers, I can talk for about 2 hours. But that would take me into auditing. Are you able to understand? Every item of the balance sheet, I can go and I can open it, go into it like a body, I can dissect the body, open it, see everywhere whether it's right or wrong, then close up and come out. So that is auditing. Don't think that auditing is a boring subject that you have to study to pass the examination. Those of you who are interested in becoming members in practice like me have to really love that subject. It is literally the company will be naked in front of you. Everything is open. I told you, you're like a surgeon. You have opened the whole thing and you're seeing the whole thing. But see, suppose a layman like me who sees the cadaver open, what can he understand? Only a trained medical professional will know what is what. Like that, you and I are trained finance professionals. Once we open it, we know each and every item, where it is, what it is, where it should be, where it should not be, how much it should be, how much it should not be. Based on that, we make our conclusions in the audit. Okay, so this is the relevant books and papers. The purpose of maintaining books of account is to explain the transactions affected by the company. Got it? I think the correct word which we should really appreciate is explain. Explain karna padega. See, the idea is not simply bald entries saying this, that. We know that. What is the background? So that is such books shall be later on when you come to auditing, you will see the auditor has to inquire on certain matters. Where certain transactions are represented only by books by journal entries, whether book entries, whether the transactions represent correct picture. You have to see mere journal entries. See, there are many non-finance professionals who would like to name the qualifications, but they think then the journal entry is something. Sir, I have done journal entries, sir, like that will say. See, journal entry is not the panacea for all evils. Merely because you debit one account and credit another account, that is not accounts. Why did you credit? Why did you debit? I'm not joking, sir. One engineer in a so-called startup company, these startup companies are one of the pains. So she's an engineer. And one software company has, unfortunately, they said very simple. You can maintain your own accounts. Don't need for accountant. You do it on your own. Okay. So this lady buys that software. I will not name what it is. Then she starts entering transactions. Then at the time of audit, it comes to us and we see. So then one of my assistants was in a preliminary review of the trial balance, not tallying. Actually, no, it was tallying because it's mechanical math. You debit one account, you credit another account, jolly well the TB will tally. And see, if the computer is doing the calculation, no arithmetical accuracy, totaling is correct. You debit one account, equally you credit another account, it will tally. But in that trial balance, my assistant is seeing share capital debit mein hai. Share capital debit. How is it possible? So I called up my manager called up. She gave some very funny answers. Then he said, sir, I'm unable to do. Then I called her. She's a nice person. I have nothing against her personally. But then I asked her, madam, that share capital is in debit. Mr. Srikanth, you are not aware of accounting? No, madam, I'm not aware of accounting. You explained to me. Then she said, sir, you know the 3 rules of double entry. Na? Mujhe malum hai, aap boliye na, what is your view? So then she said, sir, what does it say? Debit what comes in, credit what goes out. Correct, madam? He said, sir, capital is coming in, no, sir. Therefore, debit it, sir. I can't. See, I started literally crying. I said, madam, you are an engineer. How can, if to make you understand this, I have to teach you complete +2 Graval book, you have to read. T.S. Graval, you have to read. Then only I can even start talking to you. You understand? See, that's what. You and I, we never studied mathematics in +2, assuming. You studied computer studies or computer science or whatever. So we don't know trigonometry. Then can you and I presume to build a bridge? Can we presume to construct a building? No, because we don't even have the basics for it. You have to understand. Trigonometry, we don't know. Sine, cos, tan, we don't know. How can I understand curvilinear geometry? How can I understand trajectory? How can I understand structural engineering? So obviously I cannot do. But accounting is such a simple thing for these people. They think simply by buying one software they can learn. Even the fundamental they cannot. But what to do? That is the fate of these startups. So then I told her, you have a choice. Either I will recommend a good accountants or a firm of accountants who are not chartered accountants, but they will do accounting. As an outsourced service, you take it. Or you hire a qualified accountant. Don't be cheapskate because you're a startup. You will not, other places and all, you will squander the money. For getting one Munimji, you are not spending. You can't spend. You get a trained accountant or you go for outsourced solution. Either this or that. Within the next 20 days, if these accounts are not redrafted and sent to me, I am resigning and going. No auditor will touch your accounts. So she immediately ran back. They hired a trained accountant and they got it all together. They came, audit come. Why? No, I'm telling the story not to waste your time, but to show how the startup, see, that is why the law is so strict. Books of accounts should reveal that what is the transaction. Not only that, see, such books shall be kept on accrual basis. My God, this lady has not even understood double entry rules correctly. How can we talk to her about accrual basis? Where you have to account for a transaction, where, even though it has not been paid or received on the basis of earning or incurring liability. But you are all experts in that. I don't have to explain. Accrual to a group of intermediate students of the Institute of Chartered Accountants of India. I will not explain or further help you to understand the word accrual. Okay, you know it better than me. What is the point is, now the law has made it compulsory. Earlier, accrual basis was not prescribed. It was prescribed. In the Companies Act, from 1999 onwards, accrual basis has come. Also, according to double entry system of counting. Double entry system. So, they have brought it into the statute now. Also, they are given a broad idea of what is needed. Records maintained in respect of all sums of money received and expended, and matters in relation to which the receipts and expenditure take place. That's why this relevant books and papers becomes very important. Sans or without the books and papers, the accounts are nothing. I cannot audit it. Okay? All books and papers are to come. Relevant. So what is relevant? Who decides? The auditor decides based on the transaction. You're able to understand what I'm saying? The nature of the transaction decides relevance. So what is relevant? We'll see. Nobody can say these are all relevant. This is not relevant. I can't do it now. It may become relevant. Okay. All sales and purchases of goods and services by the company, the assets and liabilities of the company. And lastly, they include items of cost as may be prescribed. So maintenance of cost records is also there. When we come to that, you will see this. Cost audit also. When you come to auditors, we will see that. Certain companies only have to compulsorily maintain cost records. And such companies, some categories, also have to have a cost audit, which will be conducted by the members of the Institute of Cost Accountants of India, who will do it. So here, the relevant books and papers they use here. Here they say book and paper and book or paper. Here they use the word book. There's no way. Anyway, book and paper, book or paper. Include. The word include is very important. It is not a complete comprehensive definition. It is only an indication. Some examples are given. It can be more than that. As I told you, what is relevant, I will decide. When you tell me the transaction, you show me how it is represented in your books, then I will decide what I need to see in order to support this document. Okay. So books of account, deeds, vouchers, writings, documents, minutes. See, sometimes we audit large infrastructure and construction companies where we go. So I have to see every agreement, boss. I'm not joking. If it's too huge, then for every project, I have to do sampling at least about 30% of the agreements I have to see and check them with the register. And from that, I have to take the total. And then I have to go to the ledger. How much was collected from the apartment booking? Are you able to understand? So all that. So everything has to be seen thoroughly. So this should give you a fairly good idea. Boss, you want to become a chartered accountant, right? This is the core of what you are going to be. This is it. If you like this, then your life is going to be joyful. But if you don't like this and it's boring, then seriously, okay? But I love it. I love the joy of taking up an audit, understanding the client, his business, then going into the books of account, then checking. Suddenly, with experience of, say, for example, now 40 years of experience, as I'm going through the financial statement, something will strike me and I will make a note. While my boys and my team is doing the audit, they will go through the audit program and they will do it systematically, collecting documentation, etc., etc., etc. But beyond that, a trained and experienced chartered accountant, just by looking at the accounts, just scanning it for about 2 hours, he will be able to say, just this looks a little funny. It's like a doctor, no diagnosis. I don't need any lab report. Just by touching the patient in wherever in all the vital places, I will know where is what. I mean, I'm not boasting. I'm merely saying bring that type of love and affection to your profession. Make this your livelihood. Okay, don't make it as if kaam ke liye thing. Don't make it for earning some money. Don't do it. Do it with passion. Suddenly you'll find everything becomes joyful. And every balance sheet is a discovery process. And then you'll say, check this, check this, check this. So the minute my senior manager goes and on that particular area, he asks 2 questions now, the CFO will call me. Sir, I think something needs to be discussed, Mr. Srikanth. Can we have a meeting on Monday morning? We will come to your office. Chal, come. Wow. Let us discuss. So, are you able to understand? So, this is that type of an expertise area that you can develop. It is not just blindly mugging up and vomiting the Ind AS. All are relevant. Later on, when you read the Ind AS and the accounting standards, you will find nothing but common sense made complicated. Common sense made complicated. But undercore of every Ind AS is the common sense. Undercore of every line of the Ind AS is common sense. Made complicated, like Shashi Tharoor. If you take a gentleman like Mr. Shashi Tharoor, you give him a simple statement. He will use tough words, complicated words to make it complicated. Like that. But once you remove all the Shashi Tharoor language from the Ind AS now, bottom line, the common sense will emerge. Yeah, this is correct. That is how it should be. In this situation, this should be there. In that situation, this is the treatment. Rules are there. And these rules are fair. These rules are fair. Okay. And that has to be applied. Even a man of somewhat intelligent chartered accountant will know this is all, but it is all documented and made compulsory for all of us uniformly. So if one chartered accountant adopts it, another cannot say, I won't adopt it. It is not common for all of us. That is the accounting standards in India is. Remember, what is accounting standard? What is India is? It is not some 10 commandments that God has given to Moses in the wilderness of Sinai at the foot of Mount Horeb. No, this is what accountants have been doing for 300 years. Accountants have been doing this. The documentation is what you call accounting standard in India is. What we have been doing, we have documented. It is able to understand. There is not don't think of it as some esoteric thing or as if it is it's not the Sharia. It is not something that God has given to Muhammad. No. This is human beings doing things, reducing it into a series of. You're not trying to underplay the Ind AS knowledge or IA, accounting standard knowledge. But I'm saying, don't get so caught in the language and the complicated usages that you'll forget the basic common sense behind all that. That's all I'm saying. Don't let that. That's when Satyam happens. when highly intelligent people like you lose common sense and you start talking in India's language, then Ramalinga Raju can do what he wants. But the minute we maintain common sense, call Raju and tell him, boss, what are you doing here? What's happening here? Then even Raju will understand and do his job properly. That's all. This is as simple as that. Okay. Don't be intimidated by MDs and GMs and ministers also. We are chartered accountants. We are independent professionals. Always remember that. Our independence walks in front of us. We should be proud. Okay. Don't be arrogant, but you don't have to bow down to anybody. Okay. So includes books of account, deeds, vouchers, writings, documents, minutes. I already given you some examples. No? Registers maintained on paper or in electronic. So today electronic form is part and parcel. In fact, my humble request, do not ask for paper. Prefer to audit online. We preferably go into the ERP in view mode and use tools to audit rather than print it out and don't do all that. There's no need for it. Today, I'm myself a certified information systems auditor from ICAI. I'm a member of ICAI. So there's no need for you to print and all that. Everything can be in electronic form. We can audit it. Just have to take extra precautions to see that the IS framework is in place. Just check whether the information system security framework is in place. If that is not in place, then reject it and go for your verification. But if the ISS is very clearly in place, then you're comfortable. You can proceed with your tools. Okay. Because today with the volumes of data, we cannot afford to do complete, manual verification. It's not a good idea. Okay. So electronic form is perfectly normal. We are willing and able to do it. Okay. The Institute of Chartered Accountants of India has equipped its members in IS audit through the DISA qualification for a long time now. We have been trained in IS audit by our institute, and we know what it is all about. We don't have to worry about it. So as it includes books of account, the term book and or paper has wider import. Please note, book and paper and book or paper includes books of account. So it is books of account hai, which is nothing but your ledger, journal, blah, 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 plus every other document or electronic document or physical document that is needed to explain and substantiate the entries in your books of account. So I hope you are clear. Moving on. This is something Madam was also saying, and I think that's very important. Books of account shall be prepared and kept at the registered office of the company. A corporate office nahi. Okay, headquarters nahi. These are all names. Corporate office, headquarters, principal office. No. What is the registered office? Be careful. You studied incorporation of company. Therein we spoke about situation clause. Then we said within 30 days, the company should intimate to the registrar the address of the registered office of the company. This is a very important address. This is the official address of the company. Okay, all service of notice, etc., will reach the company only at this address. This is the registered office. This is the office that is available with the registrar in the register. So if you are going to file a suit against the company, you want to send a copy of the client, or you want to send a legal notice, then the legal notice is valid only if it is served. Use the word served. Don't say sent. Only if it is served in the registered office of the company. Maybe you already saw it when you studied incorporation. So any legal notice, anything, even if suppose the income tax department wants to serve a demand notice, then of course now they have a different way. See, they ask you to register an email address in the portal, IT portal. Once you do that, and you link it to your user ID password in the PAN, then it is enough if they send a mail to that address. Okay, but it's still for certain other matters where they have to send a postal communication to you, it has to come only to your registered address. Okay, just as a matter of curiosity, for a company, easily we can find out registered office. How? Because that is mentioned in the registers. Within 30 days, if you have informed the register, it is on record. Are you able to understand? That is why if within 30 days you do not inform registered office of the company, then the registrar has the right. Later on, when you come to final self-paced module, you will study on your own. You will study that if the company doesn't file, then such case also the company can be treated as a defunct company. Defunct, 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 dysfunctional, defunct. Okay, and they can strike the name of the registrar after sending 2 notices. They don't know where to send. So what they will do, they'll public advertisement in the official gazette, and that's it. With that company will be, you will see when you go to the register of companies, no, you will see some companies they will say no longer valid, or they will say out of thing. That means that these companies have been struck off the register. Okay, so there's one peculiar word for that they will use. So it's a defunct. So inactive, active, inactive. So they will say inactive. So it means a defunct. Okay. So this registered office is very important. So books of account are why? Because I can do. But there is a small catch here. See, example, a company was founded in Indore. Not even in Indore. It was founded in Madhya Pradesh, in Bhavra, a small district in Madhya Pradesh. I'm sure those of you from MP or nearby UP, etc. will know. So Bhavra district, they have a factory. The owners live there. They are well-off people there. And they have set up a company, etc., etc. So the registered office of the company is in Bhavra. Or maybe because of it, they have moved to Indore also. They are big shots now. So Indore. So the registered office of the company is in Indore. It is a listed company. It has shareholders across India, especially in Ahmedabad, Vadodara, Mumbai, Coimbatore, Chennai. You got it? So shareholders all over. Now, this is in Indore. So the company also may want to, you know that. So some companies, what they will do, they will shift the registered office to Mumbai, that being more central and financially better place. But suppose this company wants to set up a corporate office in Mumbai, but they don't want to change the registered office because Papaji, everybody in Indore, Bhavra, we are all Madhya Pradesh people, sir. We don't want to shift from there. Okay, Ji, no problem. You be there only. Your registered office will be in Indore only, but your corporate office will be in Mumbai. Okay. For example, the third generation or second generation might have moved to Mumbai itself because their business expands. Yeah, guys are no big shots, big shots. So move to Mumbai. So now they are staying in Mumbai only, but their roots are in Madhya Pradesh. Agree. No problem. The point here is, so corporate office is in Mumbai, sir. So we want to maintain, and when we want to hire a CFO from the Institute of Chartered Accountants of India, when we say you will have to come to Indore, some of them are hesitating. Fellows from South are all willing to come. Karnataka fellows, they are all willing to come. But the Mumbai Walas and Kolkata Walas are not willing to come. So, but Mumbai means they are willing to come. So can I move to corporate office to Mumbai? Or, okay, no problem. Then the books of account will be, so CFO will be sitting in Mumbai. Books of account will be maintained in Mumbai. Can we do that? Yes. They may be kept at such other place in India as the board of directors may decide. So hold a board meeting, pass a resolution, and shift it to Mumbai. Are you able to understand? And file within 7 days thereof, file with the registrar a notice giving full address of that place. See, this has one more relevance in it. See, later on, as you see, this you have to link a lot with final because there's a link with final syllabus, unfortunately. Okay. For example, there in final syllabus, in your self-paced module, you will find you will be studying on your own, you will be studying investigation, inspection. Now, registrar can come for inspection at any time. If so, he will come to the register office and the book should be there. If that is not there, first penalty starts. First penalty, not maintaining books at the register office of the company. But then in the meantime, if you show the board resolution and say, sir, our books of account are in Mumbai, then no problem. Okay. Provided you have informed the registrar within 7 days. Then in which case, he will have awareness that books of account is in Mumbai. So the Mumbai registrar will come and catch you. So the books of account of a branch office may be kept at that place, even a foreign branch. Summarized returns of branch account shall be sent periodically to company. See, classic example, insurance companies and banks. They are also companies. So they have branches all over India. So these branch accounts are maintained at the branch in those days and will be sent report. Now today, banks are not that way. Today, banks have adopted what we call CBS, centralized banking system, which means the complete books of account transactional data is available in a centralized server, not only in one server and a mirrored server. So that for business continuity, they'll be maintaining a mirrored server and continuously. Matter of 2 seconds, it will be the gap. So transactions, it depends on the gap. Some companies half an hour, 30 seconds. It depends, 1, 2 minutes, 3 minutes, server will be updated. Both the servers will be updated. In case there is an earthquake in Bhuj, the server in Bhuj is gone, no problem. Mumbai server will take over, or Pune server will take over. Matter of 5 minutes, server will take over. So that is called business continuity planning. Okay. So the branch account. So today it's all centralized and kept in the head office. But once upon a time, when manual accounts were there, branch accounts were maintained at the branch, which is why the branch accounts, of a company, of a bank, became very, very important. Today, audit of the branch accounts of a bank are no longer so relevant as, but for even document verification, most retail assets are the documents are maintained at a common place for all the branches. Maybe jewel loans, like that, or maybe CC, where the against property collateral is here, maybe factory visit in extremely high, value loans. Otherwise, I feel branch audit of banks is slowly losing its significance with CBS. My view. I've been auditing branches of public sector banks for the last almost 29 years now, 28 years now. And I find that the whole scenario is changing with CBS. Anyway. So now books of account and other relevant papers may be kept in electronic mode. Okay. So the books of account and other relevant books and papers maintained in electronic mode shall remain accessible in India. I feel the proposition could be shall remain accessible from India. But they say in India. I don't know what they mean. They mean server should be in India because most of the time, we use cloud. Now, when we use cloud, I cannot guarantee geography, sir, because once I get into the cloud computing as such has no geography. See, I may be using Amazon server, in which case it will be in US, right? But then the MCA feels that it should remain accessible in India, which means I don't know. Maybe I need to keep one copy of the books of account, etc., continuously download it and keep it in a server in India, something like that. Okay, I don't know, my understanding. We retained completely in the format in which they were originally generated, sent or received, or in a format which shall present accurately the information generated, sent or received, and the information contained in the electronic record shall remain complete and unaltered. See, they are still worried. For example, I'll put it this way: scanning the bills and sending it and storing it in electronic form. Just, sir, today, bills themselves are generated electronically. Are you able to understand? Gone are the days when you typed out invoices and data punch them in the accounting software. Today, the ERP generates the bill. Okay, so we are basically not talking about formats. We are talking about data. So all I need to be sure is that data was generated in a controlled environment. I mean, this is a larger auditing context. I don't want to go there. But point is, the MCA says, whatever you are doing, it should be in the format in which it was originally generated. I don't know what they mean by that. Because as a software designer, for me, data is more important than the format. Once I collect the data in the input screen, I can give it to you in any format you want. You tell me what you want, I'll give it to you. Okay. I was in software design and development, nearly 7 years of my early practice. When I started practice, initial stages of practice, I was also into software design and development, accounting software. Before Tally, in those days, before Tally, we have written COBOL, DBase, Fox Pro. We have written software for commercial entities. We used to earn something. They pay some 1 lakh, 2 lakhs. It was a big pain, but we'll go. Then we'll support it. Then of course, Tally came. With that, everything gone. No more need for accounting and payroll softwares. So I sold that company and I walked out. So what I'm telling to tell you is, format is possible here. Once you have the data, you can create any format you want. There is only the skin. Back database that I'm more. So there are three layers now. The skin that you see, the application that makes the skin visible and connects the skin to the database. And of course, the solid database which is there, the RDBMS, the relational database management system, which I can directly access through SQL. Yeah. The SQL, I can actually directly access through the SQL, structured querying language. And I can make it talk to me. Are you able to understand what I'm saying? I can make it talk to me. It will tell me all your secrets. That's it. My audit over, I'll go away. So that is the changing nature of the auditing space. So later on, when you study auditing, please remember what this old Buddha accountant told you, who is now for 59 years old, but he has gone through every phase of computer. Yeah, no computer era, then mainframe computer, then COBOL, DBase, FoxPro, PC, then all the DBase, FoxPro and all, then RDBMS, graphical user interfaces, ERP, okay, Oracle, you name it, okay, SAP, everything we have seen. Now you're talking artificial intelligence, that also we have seen. Okay, we were there before computers. We are very much there when computers are there. We will be there even when computers are not there. Chalo. Now, for the financial year or years commencing on, they've used the word, they will again, see, do not raise hands. Put queries in the query pad. If you raise your hand, I cannot do anything. What I will do, I will come to a logical halt. At which point in time I will take your questions. Farhan, Mohammad Farhan, don't raise your hand. Whatever आपका query है, you put it in the chat box. Okay, I don't think you can speak. Okay, nor can I permit you to speak because I don't know the rules here. Normally, no speaking, only chat box or query pad. And since I'm going in the depth of topic now, I don't want to interrupt myself with queries. Blamin Devakumar is asking, many people make fake bills. So how do we find it? Good question. I will answer it, sir. Abhi to nahi. No, maximum, you give me time to close this part and come to a logical part. Then this query that you raised, Mr. Devakumar, will be definitely answered. Interesting question. Though it's technically an auditing question, let me. Yeah. Many people make fake bills. I will answer that question. The greatest of all fake biller, the great Mr. Ramalinga Raju, the father of fake billers. Okay, so don't worry. We'll talk about that. Just give me 2 minutes. Okay. So the bop of fake bill ka bop. Huh? Okay. So that is Ramalinga Raju. Okay. For the financial year, as usual, I don't know why they use the singular. Right? So think. All of you are raising hand. Kya ho gaya? Yeah, audit trail will be seeing. Don't worry. Audit trail will be coming. Nidhi ji, you are jumping. Don't jump. Allow the faculty to go there. Whenever, if by the end of a certain point, they raise their hand, let us see. I am taking a call on speaking because sometimes I find in speaking, language issue is there. As you know by now, I am not fluent in Hindi. So if a student wants to speak only in Hindi, they cannot understand. So that is one problem. Secondly, let us see. I will take that on advisement. Whether to permit students to talk, I will take it on advisement. Okay. Allow me to take the call as a faculty. So raise your hand. Maybe I'll see if your hand is still raised. Let us see. One more thing is the way in which this lecture is going on. See, I'm using a PowerPoint presentation, which means I cannot see you all, nor your raised hand, except when it comes as a message there. So I'm seeing only my screen and reading from that, and you are seeing the same screen. So that is why. This is not an interactive class where you're all heads in front of me and I can talk to you. Maybe we'll try to do that. Maybe once the queries are there, we'll try to. At a logical point, we do that. Okay. When I say questions, then you raise your hand and then I will. Maybe I don't know how to unmute you also. Maybe the technical person has to do it. Chalo, no problem. So for the financial year or years, I hope it is years because they use the singular. Many people in India have noticed many of the one of the common grammatical error is usage of singular where a plural is needed, usage of plural where a singular is enough. Okay, this is common vernacular speakers' mistake in writing or speaking English. Okay, this has been committed even in this section. But that's okay. So for the as usual, we will not reduce the law to a futility merely because of the grammatical error, and we will add an S there. So for the financial years commencing on or after first day of April 2023, every company which uses accounting software shall use only such accounting software which has a feature of recording audit trail of each and every transaction. So now question is, क्या है audit trail? इसका meaning क्या है? What is audit trail? Good question. Audit trail means, see, it's simple. I am entering a transaction. Day after tomorrow, I am removing the transaction. I go there to the ledger and delete it. Okay. Now, if audit trail is not there, we will not know whether such a transaction was entered and deleted. Only we will know the last transaction which was entered, only we will know. But if audit trail is enabled, I can enable that enabled audit trail is nothing but any addition, modification, deletion will be tracked. So if A made an entry, we will know his user ID password and at what time, which day he did it. Then B came and deleted it. We will know B deleted it. So this is called audit trail. Every transaction and everything that you do with the data will be tracked. And an edit log of each change made in books of account along with the date when changes were made will be available. And audit trail cannot be disabled. Audit trail cannot be disabled. So even the systems administrator cannot disable the audit trail. Now, so today that becomes a big pain for me. So, boss, more than 400 corporate clients here. Out of that, easily about 50 are top clients. They will enable audit trail. But then there are small clients on the other end of the spectrum. They don't even know what is audit trail. Luckily, Tally software has enabled audit trail. I mean, you can enable audit trail in Tally software. So what we recommend, up to a certain level, you go for Tally, enable audit. We will come and enable your audit trail and go. Above a certain level, maybe you are outgrown Tally, then you go for your own ERP, but we will interact with the ERP supplier or the software developer, and we will verify whether the audit trail is enabled or not. We will check it, and then we will lock it. Nobody can do it. So nobody can disable it like that. So this audit trail is very, very important today, and it has been made compulsory. Okay. So from 2023 onwards, first April, because they kept postponing it, and finally 2023 they said all of you should have. Okay, and because of Corona they kept on extending it, but with all the extension games that our enlightened government does, finally they have to come. They will announce something. They will announce the due date. They will say due date. Then they will extend it. So God only knows. We will all become serious about it. The information received from branch audit officers shall not be altered and shall be kept in a manner where it shall depict what was originally received. Information in the electronic record of the document shall be capable of being displayed in a legible form. See, this is all because the fellows don't know what is information systems. They don't understand IT. That is the problem. So they are struggling hard to see to it that nothing will go wrong. But finally, boss, it will be possible, yeah. And it will be, you can display it in a legible form. Why should we not display it in a legible form? Okay, any format, I'll display it for you. So the audit committee of the board shall ensure that there is a proper system for storage, retrieval, display, printout, or electronic records. Such records shall not be disposed or rendered unusable unless permitted by law, right? And Backup of all data, including data at foreign location, shall be kept on servers physically located in India. It's okay. Backup will be kept in India. So you can have one abroad and one backup should be kept in India always. Okay, is the point. So this is what it is. The company should also intimate to the registrar the name of the service provider, the internet protocol address of service provider, location of service provider, all that they have to give. So now it's a good point in time to stop. In case any of you want to ask, in case company maintained all books of accounts, don't say books of accounts, Mr. Anil Golti, books of account. Just humble request. If you can correct it, I'll be much obliged. Otherwise, if you still want to write books of accounts, no problem. In fraudulent manner, and even auditor failed. Is that case? Could you please answer? Good point, sir. I don't understand. You want me to answer? This is what happened in Satyam, boss. This is exactly what happened in Satyam. Books of account were maintained in fraudulent manner. Auditor failed. Whether due to management, I don't know about that. No comments. Whether there was a management collusion or not, I don't know. Auditor failed. That much is clear. Could you please answer? What answer? What answer you want? I don't understand. Okay. I don't understand your question, Golti. Service provider means, see, suppose you are not having your own, suppose the data is being stored in a server. Okay, there you are not in your own server maintained by your own employees. Say there are two possibilities. One is you have your own data server, you have your own application server, you have your own systems team, they maintain it and all. There are companies like that. The other is you outsource the whole thing to a agency. That is called a service provider. Okay, where all your data, not only financial data, commercial data, everything is stored on a outsourced service provider. So that person's data should be provided. That's called a service provider. Ideally, you should employ your own team. If you are very large, you will do that. Once you become a very large company, you would prefer to do that. Now, for 2 minutes, I'm going to stop share. Somebody was raising their hand, na? Raising the hand, na? Now, if you want, they can unmute and talk, if they can. Mr. Manish, is it possible for people to unmute and talk? Okay, so kindly unmute and talk, sir. I'm ready and waiting. Mohammed Farhan. Yeah? Currently, but earlier Mohammed Farhan raised, Nidhi raised. If in case the gentleman wants to speak, he can. Otherwise, I will go back. Wonderful, sir. Thank you. So anytime you can, now that we know the procedure, you raise your hand, I will immediately, you can unmute and you can talk. I will say, please talk, you can immediately talk. Okay. Thank you. Now, coming to Mr. Dev Kumar's wonderful question, fake bills. See, in those days, it was possible to do fake bill and all. Today, there are so many corresponding corroborative things. Now, why would they want to have a fake bill? I assume that the fake bill is a purchase fake bill. Because why would you raise a sales fake bill? Because if you're going to raise a fake bill for sales, plus you raise 100 bills here. Finally, I'll come to you. And in my audit program, I have about 59 things that you have to reconcile. One of the things that you have to reconcile is your sales should be reconciled with the GST. Your sales should be reconciled with the GST. Right? Now, so if you are going to offer pay 18% tax on that, seriously, I don't know, especially this will be possible only in service industry. Suppose you are a goods, suppose you are in goods, then you will raise a fake bill, yeah. But where is the stock? Where is the stock? See, recently, one of my clients, they are in jewelry. So during the demand period, they deposited specific banknotes, SBNs, for which there was a clear sales. And those were nothing but sales collections in the B2C business to customer. So customer comes in, up to 2 lakhs, he can pay cash. They have paid cash, goods, jewelry has been supplied. Now, one of the doubts that the income tax department will have is these are all fake bills. Your thing was only to you wanted to bring in your unearned money and you wanted to avoid paying tax on that. So you brought it in during the SBN period, during the demand period as your turnover. Agreed. That's an assumption you are willing to make, you are entitled to make. But as the assessee's representative, I have the ability to disprove. How can I do it? You are saying it's a fake bill now. First, GST has been included. I have paid 18% tax on that. Okay. Agreed. That's one very powerful reconciliation. Suppose the fake bill was raised for purchase, sales. It is figuring in GST now. So GST ka turnover and books ka turnover, same, tallying. But for some small reconciliations. Agreed. Okay, sir. No, I don't believe you. Did you have stock on that day to sell? Correct. Now I will show you my electronic stock register. Grammage wise, I'll show you. Item wise, I'll show you. On that day, what was my stock? From April 1 till the date of his announcement of demand. Then every day I will show you stock. Every day I will show that stock was there to sell. Are you able to understand? So there are many other methods of corroboratively finding out whether the genuineness of the sale. If it is a purchase, even better. I need stock entry, boss. I need goods received. And the stock should go up. And corresponding sale is there, means then no problem. Now see, are you able to understand? Purchase sales. That's all. So, and plus ITC, you're going to claim the input tax. That means if it is a fake bill, who will pay the input tax? Somebody should have raised that bill and he would have paid the tax now. Only then it will get reflected in your 3B now. So today there are many methods of corroboratively verifying whether it's correct or not. In spite of that, no. If you do this type of diligent verification, matter of 2 hours, the client will break down and he will start weeping and he will confess and he will say, today no client is foolish enough to do that. Yeah. Today the system is so strong that there is no premium in raising fake bills. I'm telling you, this is 40 years experience is talking to you. Sir, 90s, yes, these fools were doing that type of activities. Even in 2000. But post 91 itself, they stopped. Post 2000, there is no premium in doing this. Because everywhere there are controls checks. Suppose your book sales is so much. Your GST sales is lower than that. Immediately income tax department will come, GST department will come. How come you are showing so high turnover? Here, GST less. So, Mr. Blamin, Devakumar, so many methods of finding. If you understand the subject logically, it is easy. But if you're going to be suspicious and don't do that. I'm not suspicious of my client. But if my suspicions are aroused, then that's it for him. Yeah, he has to show right to the root. I will go and check whether the transaction is genuine or not. So, I'm not joking. I have done for a bar, forensic audit for a bar, whether the bar sales are correct. I was able to show clearly, boss, you are having stock. What happened to that stock? Where is the bill for that stock? So they have sold without giving bills. They have given liquor, taken the cash. So I made a calculation. And I said, so much stock was there. From TASMAC it has come. Then it must have been sold now. So they thought, they are so, uneducated people. They think nobody will find out. DD, like fools, they think. Purchase is there. Now sales, where is the sales? And TASMAC, it's all controlled commodity. MRP is fixed. TASMAC, everything is known. So where is the GP then? How come you got so much purchase? How come your GP is only so much? That means the balance is sales, which is unbilled. Okay, like that, you have to develop your thinking capabilities to become an excellent auditor. Okay, wonderful. Now, see, service provider cannot give any information, madam. His job is only to maintain your database. Maintain your database. No, maintain your database. He won't do any data entry. Data entry will be done only by your staff. See, it will be like, let us say that you are using a software as service. where accounting software is hosted by a foreign service provider or an Indian service provider. He will give you user ID password. Thereafter, the entire database will be under your control. He cannot go there. Only the systems administrator that he has can do data. See, he can take chunks of data, and that's what data management. But the actual data will be under your control. It should be under your control. Are you able to understand? So all entries, etc., will be made only by your staff. And their entry exit will be managed by the audit trail. Are you able to understand? So the service provider will only provide the environment. He will provide the data. So 3 levels, he will provide environment. That is, one is the GUI, the graphical user interface. Secondly, the application, which will be robust. If you need any changes, they'll make changes in the application. Thirdly, the database server, which will be firewall. There is the ultimate firewall. And only you can go there and come out. Application access only you have. He doesn't have. Okay, this, to understand my language, you have to learn a little more on IS audit. But it's very simple. 3 layers, ma'am. What you see in the screen is your GUI, graphical user interface. We call it skin. The skin interacts with the application software. The skin can even be on your software and it can be in the local server. The skin enables you to, the GUI enables you to interact with the application. Then the application takes the data and gives it to the data server where it's stored. Then the application helps you to create reports. The application helps you to enter data. Are you able to understand all this? So all this entire framework, instead of you owning it and instead of you investing in the infrastructure, you hire it. Are you able to understand? So think about it. You are staying in a rented accommodation, but you have lock and key now. But owner is the owner, but he is providing the building to you, but you have the key now. Without your permission, even owner cannot come inside. So no question of the service provider getting in, doing any misinformation. If at all any misinformation, it will be done by you and your staff. Sorry, you means the CFO, the MD, CFO, staff. Only they will have control. Never the service provider will be able to do it. Okay, so this is my understanding of the technology. Maybe मैं बुढ़ा हो गया ना, so maybe I don't know the technology. Huh? Okay, no problem. So, sir, I've seen all your technologies, sir. Okay, sir, if I had query in previous clip, could you answer that break regard the general revenue account? I understood the whole point. General revenue account. Oh, general revenue account, like dividend. General revenue account, see, before the IEPF, can you understand this? Before the IEPF, in 1999 only the IEPF was formed, but unpaid dividend was there in the unpaid dividend account before IEPF. That was transferred within 3 years. There is no IEPF at that time. So where they will transfer it? So the central government had an account called general revenue account. It is a central government entry where it's like you pay income tax, now it goes to the income tax department, right? Like that general revenue account, there will be on challan. You pay, you write in that code number is for this, then you pay, it will go to the general revenue account. So that money was also lying in the general revenue account. Now, that also will get transferred to the IEPF. I hope I have clarified your doubt, sir. So the general revenue account is nothing but before, pehle wale. That is, before IEPF 2013, there was IEPF 1999. Before IEPF 1999, what was there? General revenue. So all that money was accumulated now. All that got poured into the first IEPF. Then from that, it came to the current IEPF. That's all. Sir, I don't want to get too much deep into these queries because they're going out of the current topic, which is our Companies Act. Okay, so don't worry. If you think fake expenses are there, verify the bills and all that. There are so many methods of verifying now. There is the whole concept of auditing. See, there are lay people who will talk about bogus bills, the fake bills and all. You and I are auditors. We should not speak about bogus bills. Okay. So, Mr. Kevin Norona, I have answered general revenue account. I hope you understood. If so, you can just confirm to me that you have got your answer for your query. To reduce the profit, they are increasing fixed expenses to dummy supporting. Hello, Ms. Sangeeta Vani from Southern region. You are increasing the expenses. So you are all familiar with the 3 rules of double entry, na? So you will debit staff welfare, na? Where you will credit. Balance sheet should tally, no. See, in the P&L account, you increase the fake expenses, reduce the profit. So in the P&L, one account you debit, should you or should you not credit another account? Which account you're going to credit? Either you take the cash out or you have to credit creditors. So the minute fake bills are being used to reduce profit, believe me, if I'm seeing the account 3 years down the line, the minute I see the balance sheet, sundry creditors figure, I'll immediately call the MD and I would say for a meeting, sir, how much of these creditors are genuine? No, Mr. Srikanth. What, Mr. Srikanth? Sir, 3 crores bogus, sir. So, what do you do with the 3 crores? One fine morning, they are a sitting duck. The income tax department will take it up and they'll ask them to get confirmation from the creditor. Same thing you do. Exactly what I do. Once I have a doubt about the creditor, I'll say, boss, they are all genuine creditors. No, they are all genuine creditors. Okay, then get confirmation. Get confirmation. You don't get. I will write to them. Let them give confirmation. Each one of them should give confirmation. One, two. These are all appearing in your books for more than 3 years. Why you have not paid? Are they fools that they will keep quiet that you have not paid for 3 years? So these are all methods of verifying. See, just asking question is very easy. Okay. It is not possible to identify fake bills, sir. There is a subject for auditing and it also needs experience. So what I told you, excessive creditors. There are many methods of that. Not my job to teach you that, but don't. Even in auditing, it cannot be taught. That is why you're doing articleship. 2 years, 3 years, 1 year, 6 months, 3 months, 1 month, how much, whatever time you're doing articles, a senior like me who has experience will teach you how to do it. That is why our system is not only, bookish reading and getting a piece of paper. The 3 years or 2 years or 1 year or 6 months or whatever you decide to spend with a practitioner is when he will give you, like I am now doing to all of you, the practitioner will show you. This question you have to ask him, Anilji, sir, to your senior in articles, you should ask how to identify fake bill. They will tell you. Don't do. There are many methods, but I can't keep on telling this because I'll be wasting my time. Okay. So it is today I will tell you, see, I've got 600 clients here. Believe me when I say this, I'm not boasting. I'll tell you, none of them can play games. None of them can play games with me. That's the end of it for him. He goes out, period. That is me. I am not dependent on the client. Client is dependent on me. This arrogance, if every auditor in this country has, if this independence, if we can demonstrate in our behavior, then how there will be frauds, how there will be fake bills. You should have to take it as a sense of pride. And instead of accepting that there will be fake bills, they'll say, what fake bill? I will take care. And I will warn these fellows. You do any, if you want to avoid tax, don't come to me. And you go anywhere you want, don't come to me. You might be surprised with this type of talking. So this man got 600 files because one client called to me from Salem and he said, Mr. Srikanth, after I became your client, 2.5 years down the line, 3rd year audit is going on. He told me, sir, my brothers and I are able to go for foreign tour without any worry. Because earlier they were doing fraud now, so if one brother or 2 brothers continuously have to stay in the shop. But once they took my advice and became clean, thereafter they're saying all the families, 3 families with father and mother, we went to Singapore, Malaysia, sir. Never we have gone. He thanked me. He was crying. Okay. So this is the peace of mind that you can give. I know this sounds a little boring or even unnecessary for you, but believe me, if this type of ethical, thing each and every one of us can bring into our life, you will get a lot of clients. The foolishness is thinking that only if I cheat, only if I do fraud, only if I help the client to reduce the tax, I will have clients. No. I am the living proof. And not only me, I'm sure there are easily lakhs of auditors in this country, at least 10,000s of auditors in this country who will accept what I'm saying. And who are well off and rich. Don't think only unethical people can become rich. Ethical people can also be rich. Okay, this is my humble view. I can, to what extent you can question, I can remove right up to his underwear, I can go, yeah. That is why I'm auditor. If you do not have the guts, don't be a practicing CA. Okay, don't be a practicing CA. Okay, don't come here. Okay, if that guts is not there, don't come. And believe me, once they know, they accept. Anilji, this is an attitude towards life. If your attitude towards life is clear and ethical, everything will fall in place. But the more we worry, can I ask? Why can I not ask? That is what auditing is called. Later on, when you come to auditing, I'll explain to you. Don't worry. That is what auditing. Otherwise, what auditing? Simply going and saying everything is correct is auditing. Okay. Of course, I'll come to the point. When I come to auditing, I'll explain more. But believe me, I'm not teaching auditing. That's not my subject. I'm zero in auditing. Okay. There are authorities on auditing who know India is in and out. But finally, Satyam. Okay. Don't worry. So, ethics, bottom line, hardcore, live your ethics. If that is satisfied, then knowledge, everything will be of meaning. Otherwise, what is the use of all this extraordinary knowledge that you're acquiring if you're going to be afraid to ask a client about, if you see a fake bill and you're not able to ask him what it is, why even get into this profession? Don't come. Okay, good. This is my humble view. Don't mistake me. And I think as a senior, now entering my 60th year, with pride, I'm talking this. No shame. I'm proud to be a member of this institute, and I'm very vehement in what I'm saying. And my success has proved it. See, suppose I'm a small practitioner sitting in some small hole, maybe you'll laugh at me. No. Well established chartered accountant in Chennai, and I'm very comfortable. And with this, okay, so don't ever get that attitude that only if we do some nonsense we'll earn money. No, okay, good. So now coming to the next topic, inspection. Inspection here means inspection by the directors. Now you might say, aren't the directors running the day-to-day affairs? Should they not be able to see? Not necessarily. Because only some of the directors are executive directors. Only some of the directors are full-time. They will be engaged in the day-to-day management. Other directors are only coming for board meeting. Independent directors, non-whole-time directors. Even amongst the whole-time directors, one director only may be in charge for finance. Others are not having access to the books. So, this section, 128 subsection 3 and 4, are enabling any director to inspect the books of accounts. If so, then that book should be made available to him. Then he can see it. Inspection shall be done during business hours at the registered place or such other place. Why they use the word registered place? Because it's either the registered office or some other place where the books of account are maintained. Suppose the financial information is outside India, then copies of the same should be maintained and used to him. Okay? Reason is, you are a director. You are having some suspicion about the company's affairs. Now you want to see the books of account. You are entitled. Now you may ask me one more question. Sir, I am not a chartered accountant. Sir, director is not a chartered accountant. Can I ask somebody else to do it? Yes, he can. Inspection is made by the director aforesaid, then the employees of the company shall give to the person making such inspection all assistance, okay, in connection with the inspection. Can I ask somebody to authorize person to do it? You can. Suppose you want to, I have been authorized by many directors to do it. There will be a dispute between directors. So one of the directors will authorize our firm to do it. The auditor may be different. Our firm will be retained only for verifying on behalf of one of the directors and reporting to him or her. That is also quite possible. So, inspection in respect of any subsidiary of the company shall be done only by the person authorized in this behalf by a resolution of the board. So, that company accounts director can inspect or his authorized representative. But subsidiary, director of the holding. See, how I will understand this now. Any director of the holding company cannot demand inspection of the books of the subsidiary. Suppose A is the director of a holding company, he or she cannot demand inspection of the books of account of a subsidiary. Holding books they can ask, but subsidiary they cannot. So if there is to be an inspection of the subsidiary books, then The board should authorize the person. Only then they can do for subsidiary. This is because all said and done, holding and subsidiary are separate legal entities. Only for consolidation purposes, we bring them together. Otherwise, they are alag alag. So this board cannot do there. Though they can control the composition of that board, only a director of the subsidiary can inspect the books of the subsidiary. But holding ka board can also do it, but provided they should first board meeting, they should authorize a person, and only that person can do it. Okay. Now, when a director seeks financial information kept outside India, he shall make a specific written request in writing. And the request for such financial information shall be made by the director himself and not by or through his power of attorney holder or agent or representative. Such financial information shall be provided within 15 days of receipt of the written request. So based on that, they have asked you a question in the exam, which goes like this. One of the directors of Suryodaya Pharma has sent a request for inspection of the books of account of the company. The company books. The CFO of the company refuses to provide access to the said books on the grounds that the director will be provided with a quarterly summary of financial position at the board meeting. Advise the board of the company as to whether the action taken by the CFO is correct in the light of the relevant provisions of the Companies Act. Will your answer be different if the request is made by a shareholder? Now, kindly try to think of the answer. So you can see whether you got an answer. Let us see whether anybody is giving an answer. Beautiful. Meaning of CFO, Nidhi is asking. That is the designation you are going to aspire, madam. You are going to want to become a CFO, Chief Financial Officer. Okay? Every one of you who's listening, if you're not going to be in practice like me, foolishly getting into practice, being ethical, all nonsense, you want to be really successful, get into service, then you will become ultimately, you will become CFO, Chief Financial Officer. Just like CEO, hai na? Chief Executive Officer. Okay. In my firm, I'm the managing partner, but I call myself CEO. What CEO, you know? Chief Enabling Officer, not Chief Executive Officer. I don't give command. I enable. I provide the resources. I provide the knowledge, provide the support systems, advice, guidance, always available. I clarify the goal. I give the empowerment. That's it. We achieve. That's called Chief Enabling Officer. Of course, you have Chief Executive Officer, either Audit, Java, Isagaro. That is also there. And CFO is Chief Financial Officer. Okay. So, as rightly pointed out by some of you, the CFO is completely wrong. Correct. CFO is not correct. Maybe he misunderstood. So under the Companies Act, it is the right of the directors to make an inspection. Okay. So they have to. Now the next question is there. How about a shareholder? Can a shareholder demand inspection of accounts? No. This right is available only to director, not to shareholder. Think about it. If shareholders are given the right to make inspection, every day two fellows will be sitting in the reception asking for inspection. One. Secondly, the books of account are confidential documents. So a shareholder may be holding one share and he may want to inspect the books. He will know everything. Yeah, my third quarter sales, he will know well in hand. Nothing wrong. Anyway, I'll be publishing it if I'm a listed company. But if an unlisted company, then it will be known to him. He competitor may buy one share and send to one person to come and do all this. So no, shareholder cannot, but director can. So CFO may be asked to correct his opinion and permit that. Mr. Aditya Ram, Director of Suntech Infosystems Limited, which has an office in Seattle, USA, demands certain financial information relating to the Seattle operations over phone. Okay, so over phone. You got it, Your Honors? Okay. Examine the validity of this request. If the financial information is outside India, he shall make a specific written request. See, friends, again, I'll go back to run rate. This is carrying 2 marks here. So for 1 mark, how much you'll write? I'll tell you. You write only this. When a director seeks financial information kept outside India, he shall make a specific written request. In the instant case, Aditya Ram has made the request over phone. Therefore, it is not valid. That's all. 1 mark. 3 lines, 1 mark. Don't write anything more. Then, in case the written request is sent by Mr. Aditya Ram's advocate on his behalf, should the financial... There you write this. My slide is enough. This is the answer. The request for such financial information shall be made by the director himself, not by or through his power of attorney or agent or representative. In the instant case, the request has been sent by Mr. Aditya Ram's advocate on his behalf. Therefore, the financial information need not be provided. Straight away, 2 marks. Don't underestimate 2 marks, sir. When you need 16 runs to win, 2 marks is good. Another 2 marks. Okay? Then three boundaries or 1 sixer and 1 boundary. You are there. You're able to understand what I'm saying. So, every mark is important, sir. Don't underestimate that. Keep track of your mark count. As you write the paper, I used to do that. When as I'm writing, I will know marks. Run rate. See, if you are a good batsman, you should maintain the run rate in your mind. Not only should you maintain the runs already taken, how much more to take. So every ball I need to score. Remember that. Every ball I need to score. Something boundary, sixer, or square cut and then run. Pray to God and run that the fielder should miss. Something should you, such a something. Okay. Yeah. Now, how many years should I preserve? Not less than 8 financial years immediately preceding. 8 is the number of years prescribed by the Companies Act. Income Tax Act, I think 10 years, but no prescription. Generally, I advise my clients to keep it for 10 years. And in the 11th year, we destroy the first earlier year. So every year, easily about 100 of my clients, they go through the process of destruction. One of my assistants goes there and somebody is there and they also witness the burning of the complete set of data for the last, but that is the first year. Now this is the 10th year over now. So the first year would be then that will be destroyed. So 11th year over, then the first year will be destroyed. So I'll have at any time, I'll have 10 years. But under the Companies Act, only 8 financial years immediately preceding. Company has been for less than 8 years, then all the immediately preceding financial years. The provisions of income tax also shall be complied with. My suggestion, keep it for 10 years. Where an investigation has been ordered, the central government may direct preservation of books beyond 8 years. See, they come and they start the investigation. At that time, I'm having 8 years, so they go through it. Thereafter, before they go, they will say, don't destroy any year, even though technically you need not keep beyond 8 years. From now on, all books should be maintained so long as we tell you. Okay. Idea is to ensure that it's not prevented. Okay. See, in those days, physical auditing, the vouchers will be produced to us. So what we'll do is we'll use a green ink. Green is the ink of an auditor. Green ink pen. Green ink pen will be used. We'll tick on the voucher, then put an initial on the voucher or some mark on the voucher, and in the ledger also we tick. Okay, this is called vouching. Okay, today you can't vouching. Yeah, it's all electronic. So that is not how it is done. There are other methods of verifying. You can't do vouching and all. It will be too difficult. The volume of transactions does not be done. But still, sample can be done. High value can be done. So that's what I normally do is I collect the data expense-wise, and then see the flow. Then see the last year's flow, and then see whether any discrepancies are there. So if things are maintained correctly, it's by and large okay. Okay. Suppose I see a bulge, then immediately I go there and hey, what's happening? Why this month alone expense is going up? What's happening? Why last year this expense was only so much, this year it's so much. What's happening? So then we sample those months. We take complete vouchers of those months and we verify completely. And then we ask questions. And slowly we build a story. Then they say, no, sir, this year this happened, that happened. We get a reply from them. The documentation is created. They're able to understand, I raise a query, he gives a reply. That is how the documentation is created. So tomorrow when I go for peer review or NFRA, you throw the document. The document speaks for itself. My audit documentation should speak, not me. Sir, what did you see, Mr. Srikanth? This is what I saw. What was your goal? This is my audit goal. How did you ensure that the audit goal was attained? By collecting these documents. Okay. So believe me, if you go by that type of a comprehensive documentation and audit program and verification, chances are your audit will be pakka. No client can play games with you. Okay. It is only when the audit documentation is weak, the audit staff don't know what they are doing. They foolishly go and waste time. No. The team is focused on what they are doing. The goals are clear. What am I trying to prove? To prove that, what should I see? Have I seen it? Am I satisfied? Document it. Go on. This technique I learned in a very famous firm, the same firm that audited Satyam. I worked in that firm easily 15 years before Satyam. Okay. I worked in that firm in 1988 to 91. And Pricewaterhouse taught me a lot about auditing. It was so saddening that firm got into Satyam's scam because I learned auditing from the partners of Pricewaterhouse, the then partners of Pricewaterhouse. They knew that was Pricewaterhouse. If you were audited by Pricewaterhouse, that's it. You were there. You knew, the client knows that they have been audited. That is the comprehensive nature of the Pricewaterhouse audit documentation. You should see our documentation and the way we used to maintain audit working papers. I'm very proud that I was part of that. Then, of course, I resigned and I started my own practice. But what shall I say? The knowledge the complete, they said, keep all the papers here. Nothing should go with you when you go out of this building. So I told the partner Pricewaterhouse, then partner Pricewaterhouse, sir, I will go with nothing from this building, sir. He's still, what I have here, can you take away from me? He started laughing and he said, okay, chalo, Srikanth, go. Wish you all the best. So are you able to understand? That is knowledge. Knowledge is not in paper. Knowledge is not in books. Knowledge is here. What you can have here is the real knowledge. Okay? Develop that. So you can recreate everything from first principles completely. You don't have to steal knowledge from others. That's it. Knowledge cannot be stolen. Okay. So I'm sorry if I'm being a little emotional in some places and I'm a little vehement and passionate. I mean, remember, I'm 59 years old and still passionate. Okay. Passion is what makes us grow. Passion is what keeps us young. Passion is that's being human. Okay. Without passion, everything makes no meaning. Sirf kaam ke liye bas. What is the use here? Okay. Come to the point. So 8 years, CG may direct. At last, Companies Act. Without penalty, no Companies Act. So what they are saying here, penalty for contravention of Section 128. Persons responsible, managing director. See here, they don't say every director in default or even every director knowingly in default. They rifle shooting. They pinpoint and they hit. 1, managing director. 2, whole-time director in charge of finance. Chief financial officer. Any other person of a company charged by the board with duty of complying with provisions of Section 128. See, this is very important. Just because a person is GM Finance or GM Accounting doesn't make him liable. There should be a board resolution which says, maintenance of accounts, you will be responsible, and you will agree. Then that person also will become liable. This is not a director. Any other person, even some kamkari, person who is the employee. Okay. These people are liable for fine, 50,000 up to 5 lakhs. There was earlier imprisonment also, fine or imprisonment, but with the decriminalization of Companies Act, fine has been, imprisonment has been removed. Okay. Now, so let me quickly, before we go to the next topic, to see if any issues are there. At this stage, if anybody wants to raise their thing, you do. Retrieval means getting it back. So you enter the data, you have to get it back. That is called retrieval. So any information system will have all the three: data entry, data process, and data retrieval. So entry will be on the entry screens in the skin. Processing will be the application based on the rules that you've already given. And the data retrieval will be in the form of reports, which the format already given, or access through SQL server and retrieval. Retrieval is basically getting back. You are simply MSD fan. Okay, maybe I am. MS Dhoni, I don't know. Yeah, I have a high regard for MS Dhoni. MS Dhoni, one more quote of MS Dhoni I like is, you take care of the process, the results will take care of themselves. You take care of the process, the result will take care of itself. I quote MS Dhoni without any shame. What he said is absolutely correct. Whether it's a CA exam, whether it's a practicing, or whether it's anything that you want to do in your life, you define the process, refine the process, take care of the process, result will take care of itself. Don't bother about the result. So audit trail and edit log works, if I describe it, it will be very difficult. It is basically like a database wherein any change made to the data, to the accounting software, any and every change will be recorded. So if any editing, that's called log, means, see, like you come into the office, go out, there'll be an attendance register. No. Whenever you come in, it will be entered. Whenever you go out, it will be entered. Like that, whenever data is changed, it will be entered in the edit log. So that you as the chartered accountant can ask for an edit log. Then you scan it and see who has edited when. So you'll know. Suppose you feel that there's a fraud and somebody has played around, for those 3 days, you go and see who edited. Okay. In fact, believe me, once employees know that there's an audit trail, that an edit log is there, they will not play games like that. Yeah, sometimes they ask you penalties for, once again, I may be, what is the meaning of retrieval? See, a negative need not be stated. Mr. Abhinash Gupta, you are asking a very good question. How should we mention in answer? The section talks only about director. Therefore, by negative conclusion, I can arrive at the conclusion that shareholders are not. So you go ahead. If you want very particular, you say, section talks, 128 talks only about inspection by directors. Therefore, the presumption is that shareholders are not allowed to inspect the books of account. Okay. So negatively, you can proceed. Employees also cannot, sir. All employees cannot. In inspection, no. Don't, your Sangeetavani, don't include employee. The section talks only about director. Employee cannot. Employee can prepare the accounts, etc. But without permission, he cannot inspect. Got it? Okay. Meaning of CG. CG means central government. Yeah. Wherever, in future, wherever the word CG is used, please understand it, Nidhi, to mean central government, not capital gains. Contextually, you have to understand it. Are we studying income tax? Then CG is capital gains. Or corporate governance also is there. So here CG means central government. Okay. Take that sentence and see whether your expansion will fit that sentence. Read this sentence. Where an investigation has been ordered, capital gains may direct. Are you able to understand? Contextually, you read, how can this ever be? How can this ever be capital gains? Okay. So CG means central government. Whenever I use CG, similarly RD means regional director. Is standard abbreviations. NCLT, National Company Law Tribunal. Okay. So second point of preservation of books of accounts. Second point. See, suppose the company has been there for less than 8 years. See, 4-year-old company, how many years they have to maintain? 4 years. For all immediately preceding financial years. So I am no 4-year-old company. How many years I have to maintain books, preserve the books? For immediately preceding all the 4 years. I'm now a 10-year-old company. How many years I should maintain? Only for 8 years. I'm 7-year-old company. How many years I should maintain? I can only maintain for 7 years. No? And Income Tax Act also should be maintained. To my knowledge, Income Tax Act is 10 years. Some of you are authority in income tax. You can correct me. Others, okay. So now, friends, it's time now is something like 7:45, right? Yeah, exactly 7:45. Let's have a small break, 5 minutes, maximum 10 minutes. Okay, shall we? Then we'll take up financial statement, etc., etc., etc. Sir, small break, sir. Sir, small break. Yeah, thank you. So, welcome back. We finished 128, section 128. Now we move on to 129. Before that, to understand that, we need to understand definition of financial statement. Financial statement. So, I'll tell you my logic of why it's a singular. Okay. Before that, one last question was asked in the chat box, which is why 8 years? Mujhe nahi मालूम. I don't know. I'm unable to think. Why 8 years? Why not 7 years? 7 is a better number. 7 is a magical number. 7 is an esoterically magical number. 7. But Saptadvipa Vasundara, Saptarishi, Saptakannika, Saptamata, Saptapatni, Saptapati Vrita. So, like that. So, 7 is a magical number. Why 7? Why not? Why 7? Why not? Why 8? If I can guess, I can. If any of you will provide the answer, I will be a learner for you. If anybody has an answer for why 8. Okay. Manishji has sent a link in the chat group. In case you want to join the WhatsApp group, you can go through that link. Right? Manishji has already put it on the WhatsApp group. So if you want to join the WhatsApp group, please follow that link. Okay. So financial statement, because see, basically, हम सिर्फ एक ही है, which is balance sheet. So the balance sheet is the financial statement. So you as a shareholder will receive the balance sheet. Now, the balance sheet has many annexures. There are documents that are annexed to the balance sheet. The first of which, and possibly the most important, is the income statement, the P&L, or the income and expenditure account, also known as the income statement. So, financial statement है balance sheet. इसका annexure है P&L, then cash flow statement, then statement of changes of equity, if applicable, then the complete notes and accounts. See, every item in balance sheet and P&L account will have a note, connected with it. So, sales or gross receipts, note 1. Like that. Cost of goods sold, note 2. And this is or share capital, okay, paid up capital, note. Usually, note 1 is changes, statement of changes. In note 1 is usually accounting policies. Then note 2, like that. Okay. And statement of changes in equity, complete notes. I told you, see, your entire financial reporting is nothing but understanding this whole framework of Schedule 3. Schedule 3 has so many, instructions, how to display, how to show, how much detailing is needed, all that. And it has to be complied with. And all disclosures required should be disclosed. The idea is to provide more disclosure. Okay. So you have to measure, correct? And you have to disclose also, correct? So measurement is there, disclosure is there. Am I correct? So it has to be done. And the cash flow statement is not part of the accounts. It is prepared based on the Ind AS or the accounting standard. Okay. This cash flow statement is not required for an one-person company, a small company. You know what the small company is in the definition. Okay, I don't have to tell you. You already studied it in definition. Small company, a dormant company, and a private startup company. Because if that cash flow statement of a private startup company is shown, shame on how they have misused the investors' money in every way possible uselessly. That will be disclosed in the cash flow. Therefore, they are not asked to show the cash flow statement. So these 4, OPC, small company, dormant company. Dormant is a guy who is almost defunct, but they feel that he will come to life again. So like Dracula, there's the famous movie Dracula, vampire they will put it in the coffin. They'll put a nail on it, silver nail on it, and they will keep the Dracula inside. Like that, this fellow is a dormant company. And most vampires, they will go to bed in the daytime. In the early morning, before sunrise, they have to come back and lie down in the coffin. Again, when the sun goes down, the coffin will open and they'll come out again. So that during that daytime, they'll be dormant. Dormant means sleeping. So gaya. You'll be sleeping. So sleeping company. And you can always revive a dormant company. And a private startup company. They need not include a cash flow statement. Okay. So these are all components of a financial statement. Okay. Now, the word annexed and attached are there. I'll explain it to my best of my ability. For the purpose of this section, except where the context otherwise requires, any reference to financial statement shall include any notes annexed to or forming part of such financial statement, giving information required to be given and allowed to be given in the form of such notes under this act. Which means what? The notes are annexed. Friends, for that matter, P&L is annexed, cash flow is annexed, statement of changes in equity is annexed. So which means what? Balance sheet है financial statement. Okay. इसका annexures है income statement, cash flow statement, changes of equity, notes. Got it? So annexure is a very powerful word. Any document which is annexed is part and parcel of the financial statement. Unless the context otherwise is. Sometimes it may not be. So, are you able to understand? For example, some cases there is no need. Okay, pure disclosure standards, even then, I'll tell you the real catch here. Please note my point, Your Honors. Any document or statement which is annexed to the balance sheet or which is annexed to the financial statement is covered by the auditor's report. So when I'm giving my audit report, I'm covering every document. Of course, I'm certifying the balance sheet. But once I certify the balance sheet, I'm certifying the income statement, cash flow. Every document that is annexed to it forms part and parcel of the financial statement. And my audit report covers that. Are you able to understand? Which means director's report is not annexed. We'll come to that later. The board of directors report attached. It is not annexed. Please note the difference, Your Honors, because I am not giving a report on the, I am not giving any report on the director's, I am not giving any certificate for the director's report. Whatever those rogues are putting there, that is their problem. I am not certifying it. What I am certifying is the balance sheet and every document annexed there too. Are you able to understand? Which means notes on accounts, not responsibility. I have to be careful what is said there because my certificate covers that. It's a very subtle point you have to understand. This will be very relevant to you when you come to auditing also. Right? Now, annexed and attached, can I explain in any other way? Yes, I think I can. By giving you these two examples, I can. See, I'm now sitting in my office in T Nagar, in a small place called Chennai, in the southern part of this country. I don't know if you're aware of the place. It's a very small city in a place called Tamil Nadu where some of us live. Now, see, this is a clip. Okay? And this is a stapler. Right. Now, this is a document. This is the balance sheet. Okay. Now, I am annexing. Means what? I'm clipping. Now, these two together are one single. No, sir. I am taking another document. I am not annexing. I am only attaching. Are you able to understand the difference? When I am annexing, it is clipped, whereas here it is only attached. So I can always take out the clip, remove it, but not possible. Annexed. So auditor's report covers complete all balance sheet and every document annexed. So stapler, whereas director's report have attached. Okay, that's all. So this is the difference between attached and annexed. Okay, you got it? So annexed documents are very important. We have to be in order. Every one of it is covered. True and fair view extends to annexed documents also. So But note it, Your Honors, Section 129 puts a duty on the directors. Earlier, the directors had no duty to provide true and fair view. It was the duty of the unfortunate auditor to ensure that the balance sheet and P&L account revealed a true and view. The balance sheet reveals a true and fair view of the state of affairs of the company. It was my misfortune. But now, no. Every member of the board has to ensure. Are you able to understand? True and fair view is now their responsibility, not mine. Why true and fair? True and fair. Because, sir, I'll tell you why not true and correct. Many times, company secretaries and lay people who are not having any knowledge, they will ask, you auditors are certifying true and fair. You are not certifying true and correct like that. Correct. We are not certifying true and correct. Kyun? Because, sir, there are certain matters in the accounting records which are not exact numbers. They are estimate. I'm not joking. Depreciation, hey, estimate. Notional estimate was, the depreciation is the notional estimate of the wear and tear. You're able to understand. Can you predict exactly how much will be the depreciation on this table, boss? Srikanth is a very passionate man. He will bang many times. So more wear and tear. I mean, who can predict? So generally you say 10%. So that's only a fair estimate. Okay, not a correct estimate. The estimate cannot be correct. Got it? Like that, there are many, many situations where an auditor has to accept. For example, there are 3 branches. Common expenses are incurred. I'm preparing branch accounts. Definitely, I have to have some logic for distribution of the expenses. Product cost, estimated. Am I correct or not? You are all expert in cost accounting. I'm sure. You will know job costing. When you distribute the common cost, you're using some logic now. Maybe you will use activity-based costing. Wow. Even then, your accuracy level will improve. But you cannot say 100% correctly I have distributed the common cost. Nobody can say that. So to that extent, stock valuation, WAP valuation, estimate. So, I mean, I'm not saying the valuation is wrong. I'm saying, boss, it cannot be, I cannot certify true and correct, given that. But does it mean that a balance sheet will not tally? Or does it mean that the total printing and stationery total will be wrong? No. All the expenses incurred as per the vouchers will be kept correctly only. That correction, that accuracy we will verify. But everything in the financial statement cannot be correct. Some of it is only estimate. So to that extent, we say true and fair view. And it has to be fair. And there again, you are not saying anything and everything. Saying true and fair. They have made a fair estimate of the impact. See, depreciation itself is nothing but if you are really looking at it esoterically, you saw dividend. In dividend, I explained in one way. Again, I'm telling you, depreciation is not something, some rocket science. It is nothing but it's nothing but matching concept. Yeah. So I'm incurring the cost of the asset in 1 year. Can I take it to the P&L account in that year itself? Stupidity. Because it will skew. It will not be fair. Therefore, I'm distributing the cost of the asset over its useful life. It's basic matching concept. There is depreciation is not some rocket science as if you are all people trying to interpret. Yeah, some assets will have different things. I'm not trying to oversimplify, but I'm saying don't overcomplicate. Just for the sake of showing that you're some big shots, don't overcomplicate. Okay. Many times, I conduct workshops on finance and accounts for entrepreneurs and managers. And after 2-day workshop, they come to me and say, sir, accounting is so simple, sir. Absolutely. Okay. But then where is all this complication? Why? Then why CA is so tough like that? They'll ask, boss, what I taught to you was, for example, if a doctor comes to you and talks about, say, diabetes, an intelligent doctor can make a layman audience understand the basic imbalance of diabetes. And he can give them fairly good advice on what lifestyle changes they need to make to ensure that their insulin level is maintained. Or if they are already on insulin or already on diabetic medication, we can make them understand what the impact is and how they can. Doesn't mean that they can understand every complication that diabetes can always ever cause. That if I keep explaining, they'll go mad. For example, deferred tax liability. If I try to make them understand, they'll go mad. So, by and large, we can make a common man understand what it is. So, once you become members of my institute, please remember, when you talk to a lay person, don't talk jargon. Make them understand what, in simple terms, if you can, help them to understand the impact. If it is too complicated, then maybe nothing is so complicated that you cannot explain to him and make him understand what it is. Okay, it's my humble view. That would improve your respect in society as a member of our institute, rather than if you use complicated language, this section, that's it. Then they initially they may be impressed. Later on, sir, anything and everything you're telling, sir, please help me to understand correctly, like that. They will say. That time you should be able to do it. If still you are telling blah blah blah, this section, that section, after some time, when Srikanth is able to explain it clearly to me, sir, prefer to go to him like that. So simplicity is also needed. Don't think that using complicated language, technical jargon will automatically ensure respect. No. The technical jargon, you should know what it means. And you should be able to break it down into Asan language and explain to a person who is not a chartered accountant. If you're able to do this, your answers in the exam also will be very clear. Simple, argued from first principles, and therefore correct. Okay. Chalo. Financial statements of every financial year shall be laid before the company at every AGM. So that is one of the important shall. So every company should lay. Lay means present. Here the word laid means presented. So if you don't want to use the word laid, then you can say the financial statements of every financial year shall be presented to the members at the AGM. Okay, no problem. Financial year, I'm giving a definition here. Again, maybe already you studied management and administration. I think you already studied management and administration. Therefore, you would have covered AGM and all. So you are aware of that. So you are aware that one of the three rules, there are three rules for AGM. An AGM shall be held in every year. The interval between two AGMs shall not be more than 15 months. And the third rule is the AGM should be held within 6 months from the end of the financial year, pertaining to which the accounts are to be placed on it. So three rules are there. You have to triangulate the three rules and ensure that you hold the AGM at the correct time. So there they use the word financial year. Now, what is financial year? The period ending on 31st day of March every year. Uniform financial year. All companies have to close their books on 31st of March. No separate, except for subsidiaries of foreign companies, we'll see. But for that one exception, all Indian companies which are not subsidiary of foreign company should close on 31st day of March every year. Where a company is incorporated on or after the first day of January of a year, financial year is the period ending on 31st day of March of the following year. So, incorporated on or after first day of January. See, this will be logical only for those companies that are incorporated on 1/1 to 31/3. Now, these companies could always be told that the first financial year would be the date of incorporation to 31st March of that year. Are you able to understand? A company is formed on 25th of February 2025. So you can say the first financial year, they are saying now, period ending on 31st day of March of every year. So for a company incorporated on February 25th, the financial year, first financial year will end on 31st March 2025. No. Where a company is incorporated on or after first day of January, it will be the 31st day of the following year. Are you able to understand? Suppose a company was incorporated on 25th November 2024. 25th November 2024. For that fellow, again the same rule. His financial year will be the period ending on 31st day of March of the following year, which is 31/3/2025. But if the same guy is incorporated on 2nd January, his financial year will be ending on 31st March 2026. Got the point? So this gap of 3 months now, 1/1 to 31/3. Any company is incorporated at that time will have to push the financial year 1 year, means to the next March. So their financial year will be more than 12 months. Obviously. So if it's on, let's say, 1st of February, then 1/4 to 31/3, 12 years. February, March of the earlier period, 14 months, maximum 15 months. Fellow is incorporated on 1/1. His financial year will end on 1/1/25. Financial year will end on company incorporated on 1st January 2025. His financial year will end on 31st March 2026. 31/12/24. Then his financial year will end on 31/3/2025 only. It will be 3 months on 1 day. So that's how it is. I don't know why they have this. Don't ask me why. Maybe because they see too short a period. Nah. Why? You go for the next year. That's what this. I can understand. Too short a period. Just for 2 months, don't make out a audit account. Give extra fees to the auditor. Why waste? See, ultimately, if they have one short financial year, they will collect some fees. Nah. No. That auditor should not earn. You take it to 31st March 26. Yeah. Okay. You pay only 1 year fee, ma. Why pay 2 years fee like that? Right. It's okay. Let me forego my fees. That's all. If you ask me for the logic, maybe that is the logic of the MCA. Why give the chartered accountants only extra fees? Let them take for the next year only. Okay. Maybe, I don't know. Hey, this is a joke. Huh? Sometimes you have to understand humor. Don't take it very seriously and get angry. Okay. Sometimes, I don't know, Nidhi, you go through the module, ma. Kindly don't do that, ma. I'm not fifth standard teacher, ma. Huh? This is like asking in fifth standard, no, ma'am, where is the topic, ma'am, in the textbook like that? Please don't do that, Kanna. Actually, this topic is not coming in this module. It will come in management and administration. It could come in preliminary, yeah. Because see, the definitions are all in preliminary. So it may be in preliminary and or it could be in management administration. But you see, when I'm teaching, I have to give you some context, no? So therefore, I'm teaching here. So that's what that fifth standard type of approach, sixth standard preschool approach don't have it here, where everything should be there in one sequence now. What you learned in another topic, you may have to apply here. So are you able to understand? Financial year, already pehle wala, you learned it now. Here you have to apply it. Definition, na, 2 subsection 41. Where did you learn it? Do you remember? 2 subsection 40, 41. You learned in preliminary. Remember? Chapter 2. No, chapter 1, section 2. You learned now. There. Or intelligent faculty who taught you management administration would have taught you financial year. I will teach. If I am teaching management administration, I will teach financial year. Neither. So don't expect everything to come in that order and sequence in the book. And in the examination, 100% don't expect that type of high school or +2 or UG level approach, where what you studied in that sequence only they will ask. It could be in any order. I'm asking you to, maybe I'm telling this to you even at the cost of Nidhi becoming angry with me, but I'm trying to shake you and make you understand that how the complexity of the CA inter examination. So don't expect everything to be in a sequence. Institute material is a beautiful resource, well prepared. Extraordinary effort is taken by a great group of people to ensure accuracy, to ensure presentation, to ensure fun reading, all that. But it is only a resource. The institute syllabus is very clear. You are supposed to know the Companies Act, section so-and-so to so-and-so. Okay. So level is different, professional level. Okay. So please understand. Don't mistake me. So anything that was taught earlier may be covered again, even though in the institute material, they are not giving you again. For my purpose, I am giving it. Otherwise, suppose I use the word financial year. Okay. You may have, so I'm using the word financial year here, yeah. So I have to define it. Okay. Please understand. In my textbook, when I wrote for CA final, in those days, for CA final, I wrote a book, which was very popular. I used to do that. Contextually, I'll explain. Similarly, suppose I am teaching management administration, I will not start with the first sections, my register and all that. I will go directly to AGM, EGM and all. And then come reverse. Okay. So that is how I'll do. So that's how it should be taught also. You should teach in logical order, not necessarily in the section order. This is my belief. I've been a teacher for what? 35 years now. I've taught the earlier 1956 law, not to chartered accountants. I have been a teacher for the company secretaries. And the Entire Companies Act I used to teach in intermediate CS. Final also. In fact, as I told you, I've written a book on company law for the final examination of the ICAI, which was about 12 editions came. Then the law was changed and then I stopped writing. I stopped teaching itself. Then again, when the institute started this live virtual classes, I decided why not. Corona came, I was sitting in Coimbatore. So I started preparing the materials, content, and that happened. Okay. So that's what it is. And don't mistake me, Nidhi. I understand that you have some little bit of, you want everything to be pakka, clearly explained to you and all that. while your expectation is good, also remember the intermediate exam demands independent relationship relating to topics and all that. Okay. So I am not having the institute material open in front of me. So I don't know where it is. It must be there somewhere. It should be there now, either in preliminary or in maybe in management administration. Ideally, in management administration, along with the AGM topic, financial year should be discussed. Okay. If you already studied management and administration. So now Abhiruchi Limited was incorporated on 11th December 2023. 11th December 2023 or 24, yeah, what does it matter? When should the company hold its AGM? 11th December 2023. Okay. According to, when should it hold its AGM? You may ask, sir, where is this? Why are you telling AGM? You are teaching financial statement. How you can take AGM? That is in management and administration. Like that, you can't talk in the exam. They will combine topics and ask a question. You understand? There you cannot say, sir, chapter 9 ka hai, chapter 4 ka hai. How you can combine and ask? We will combine anything and ask. I showed you, no. I can combine general classes and dividend, and I can ask you a question. So know how to interconnect. Abhiruchi Limited was incorporated on 11th December 2023. When should the company hold its AGM? According to section 96(1), that's in management administration, the company's financial year will close on 31st March 2024. The company may hold its first AGM by 31st December 2024. You got it? According to 96(1), it is not here at all. You must have studied it. Okay? The company's financial year will close on 31st March 2024. The company may hold its first AGM by 31st December 2024. Why? Because the company was incorporated on 11th December 2023. Okay. So the company's financial year will close on 31st March 2024. Correct. Next year. Then 31st 2022. Within 9 months of close of its financial year. Would your answer be the same if you are informed that the company was incorporated on 11th February 2024? See, the minute it moves to 11th February 2024, what will happen? The financial year will be the next year, which means it will be on 31st March 2025. That means first financial year. First financial year can be held within 9 months. Any other first annual general meeting will be held within 9 months. Okay. Got it? Whereas subsequent AGMs to be held within 6 months from the end of the close of the financial year. So this is still the first AGM. So this company was incorporated on 11th February. Therefore, first financial year will end on 31st March 2025. Am I correct? 31st day of the March following year. Am I correct? So 31st March 2025. That means 9 months. So you can hold your first AGM on 31st March 2025. I'm sorry, 31st December 2025. Okay. So to understand this, if you have a Kagasena, then you write timeline and then put mark. First you mark 31st December 2024, 31st December 2025. So 2 calendar years, then date of incorporation you mark. First question, what is the date of incorporation? 11 December 2023. So next year is 31st March 2024. 9 months you calculate 31st December 2024. Now, take another color pencil or color ink and you put one line. That is 11th February 2024. Now that is before 31st March. Now, so it can't close on 31st March 2024. It has to go to the 31st March of the following year, which means 31/3/2025. From that, you again count 9 months. 31st December 2025. Okay. So this is how you have to understand. These are all bonus. Yeah. Suppose you want me to only teach institute material, I will teach blindly. I can't do that. I'm not that type of faculty. I teach the subject. I don't teach chapter. Of course, by and large, we'll maintain the same chapter, but to help you to appreciate, understand, I have to go this way, that way a little bit. Don't expect everything to be in the sequence of the institute material. Sorry, that expectation, those of you who have, we'll find Srikanth is disappointing you. So Srikanth sir is not teaching as per the institute material. He is teaching something here, something there, expecting us to know everything in one place. How possible? If it is not possible, institute examination, you are in trouble. You understand my point? So I'm a coach. I'm preparing you for the game. Okay, I can't go by the thing. I have to go by the what to expect in the game, and I have to prepare you for that. Okay, this is the way I've defined my role here. Don't mistake me. Okay, the items contained in the financial statement shall be in accordance with the accounting standard. Wow, thank you. Because once upon a time, accounting standard was not binding on the company. You know that before 1999, the accounting standards were not binding on the board of directors. They were only binding on the member of the institute. Long, long ago, possibly some of you are not born. Okay, so my son was born in 1998, my daughter in 1993. This happened in 1999 when the accounting standards became mandatory. Finally, they realized if you want to, because many companies were doing all sorts of nonsense and auditors were qualifying. Nobody was looking at the qualification. No shareholder. See, I have the power to qualify now. I can qualify. Qualify means I can say the balance sheet does not reveal true and fair view. Or I can say the balance sheet reveals true and fair view subject to the qualifications mentioned below. So there I will say they have not complied with accounting standard 7 relating to construction contract. Something like that I can say. Or they have not complied with valuation. They can give qualification after qualification. No shareholder will read it. Okay. And then when the company goes into liquidation, they will say auditors have not done. What auditors have not done? See the balance sheet, see the audit report. They're qualified there. You shareholder don't even read my report, but when you lose your money, you'll come and catch me, is it? Go and catch the directors. They are responsible for this. Okay, put them in jail is the point. Okay, of course, this is a very powerful. Now the duty to comply with the accounting standard is on the board, right? Thanks to 129.1. In case of a government company, accounting standard 17 on segment reporting, I'm sure you're aware. 17 is a pure disclosure standard. There's no measurement. Am I correct? So no recognition, no measurement, only disclosure. So such a standard, segment reporting will not apply to companies engaged in defense production, right? No. In case the company does not comply, then they have to disclose why they are not complying, the reasons, deviation, and the financial effect because of which the profit is overstated or understated. Assets or liabilities are they overstated or understated has to be mentioned. Okay, this is a very welcome thing. This talks about certain specialized type of companies need not comply with the Companies Act because they have their own account rules for preparation of financial statement. For example, insurance companies have IRDA has given them rules. I can even show you the IRDA norms. The IRDA has given. IRDA, this is the financial statement regulations of the IRDA. For your information, you can see the IRDA has given this. These regulations shall be called the IRDA Preparation of Financial Statements and Audit Report of Insurance Companies Regulation 2000. Maybe there was amended subsequently, but see, they have given clearly. They have given. So, if you are the board of directors of an insurance company, then you need not comply with Companies Act Schedule 2. You can follow IRDA. Similarly, Banking Regulation Act, they follow Schedule 2, but Banking Regulation Act gives them a lot of exemptions and how to present and all that. Similarly, electricity companies, any other company governed by any other law can disclose based on that law, right? So we have to now move to consolidation. Though it may not be possible. So at this stage, I am closing I was thinking I could finish consolidation and move on, but today it is not possible. I don't know how this will pan out. Whatever it is, I hope you enjoyed the class. Let's see if any questions are there. If any, I will answer it and then I will go. Nidhi, you are right. 31st March 2025. You are right. Okay. Good. Fantastic. So I don't have any more questions. I shall presume there are none and I will possibly open up for queries. Thank you. Wishing you a great evening ahead and looking forward to meeting you on a future occasion. Thank you.